You could not buy gold in the USSR or Mao's China during the last great gold rush of the bull market of the 70s, which, by the way, with the exception of cryptocurrencies, was the largest bull market there had ever been. People don't realize how big the 70s bull market in precious metals was. By the way, when I say that gold went up 25 times and silver went up 41 times, I'm taking the intraday highs and lows, so that is the maximum potential gains. But still, that is absolutely enormous. And until cryptocurrencies came along, that was the greatest bull market of all time. Now, cryptocurrencies, some of them will do well, maybe all of them in what's coming, but there has just been a lot of suspicion cast on them with the FTX scandal and other things that have happened in that sector. I do own some cryptocurrencies, but the largest portion of my net worth that's in a single area is physical, gold and silver. You know, if they went up 25 times for gold and 41 times for silver back in the 70s, and then you look at the amount of gold that's available above ground is about twice as many ounces as back then. And so there's 18 times more people around the world that can access precious metals with 55 times more currency, according to the OECD. But there is something big coming, and you know, people like Warren Buffett, for instance, he's not going to turn to Bitcoin. Even though he said gold is a pet rock, when the people that have the most capital, the people that are in their 60s, 70s, 80s, and 90s, when they turn to a safe haven, it's probably not going to be cryptocurrencies. You know, when we used gold as money, gold is real money versus national fiat currencies. There's no nation on the earth that uses money today. And people need to start differentiating between money, because money makes, currency takes. Money is something that propels mankind forward. It's honest, it's fair. Currency is dishonest, it's fraud, and it's theft. And when you look at the way currency is created, when we used money, when we used gold, the amount of time and effort that it took to go out and prospect, find a claim, develop that into a mine the ore, refine the ore, melt it down, pour it into a bar, melt those bars and mint them into a coin, that amount of effort equaled the amount of effort that you had to work for in whatever you did to accumulate the right amount of coins of real money to be able to buy a house. And so this work was equal to the work that you had to put in, which is equal to the work that it took to cut down all of the trees, dig up all the dirt to make the copper plumbing and the cement and things, and build that house. It was a fair trade of something for something. When you use fiat currency, it's conjured into existence by a bank. When you're buying a house, you take a piece of collateral, you find a home that you want to buy. This is my collateral, I want to borrow $1 million. The bank looks at your financial record and determines whether or not you're a good risk that if you can pay this loan back. And when they say yes, they imagine $1 million worth of bank credit currency, which is reminders that it's not actual dollars in your account, at least according to the Bank of England. It's reminders that they owe you a certain number of IOUs. But national currencies steal part of your future lifetime. This is my big point. It's a tool for enslavement. Just to have them around requires your future work hours to pay on the assets that were acquired to create these IOUs. The entire currency system comes down to it's nothing but IOUs. And what is it that they owe us? They owe us part of our own future lifetimes. We have been monetized. It's an IOU, YOU. IOUU. That is what they've done to the dollar. They've stolen more than 97% of the purchasing power of the dollar. And we are about to see gold make up. It's lagging right now as far as it accounting for the expansion of the currency supply. And that is about to change, I think, over the next 3 years or so. You're going to see some dramatic shifts. There's two things that are going to trigger this. The creation of currency during the pandemic, they increased the M2 currency supply by roughly 40%. Then they decide, there's inflation, and they're like surprised. They wonder where that came from. And so to try and get a hold of inflation, they're going to raise interest rates and make them positive, but they're raising them at the fastest rate in history. There's never been anything like this. When you're coming off of such a low interest rate of 0.25%, and so, you go on the Fed's website and you can generate charts and you go year over year percentage change, and it's like 8,000% increase. It's just totally insane, since they started the rate hikes. That has never been done before, and it will end up breaking something sometime or another. When the 2008 global financial crisis happened, Alan Greenspan didn't see that, when he lowered interest rates to 1% after the NASDAQ crashed, he was trying to reflate the stock markets, and he didn't even see the real estate bubble that he had accidentally created, in his peripheral vision here. That was like a side effect of those low interest rates, that and the development of mortgage-backed securities. So there wasn't enough watching. I don't like overregulation, but they need to watch for conflicts of interest. And there were a lot of conflicts of interest going on in the banking sector then. And the repeal of Glass-Steagall and Alan Greenspan lowering the rates and not seeing the bubble that he was creating, that all caused the global financial crisis. Well, look at what we're doing this time. We've never raised rates at this type of pace before. And the currency that has just been created just before we started raising rates is astronomical. And then you look at, the national debt rolls over every 5 years roughly. It's a little bit longer than 5 years now, but if you take the average duration of all the different bills, notes, and bonds, it's $31 trillion worth of debt that we're rolling over, and we have to do basically a mortgage refinancing, a refi on the entire United States of America. We're refinancing the United States of America every 5 years roughly, and so we're only we're less than a year into these higher interest rates. So it's really not taking its big bite out of the budget. After 5 years, all of this goes to the higher interest rates. It's a death trap is what it is. There's only so many goods and services in a society that are for sale at any time, things that you can pay people for and buy. And then you've got the currency supply that facilitates the transfer of true wealth, the stuff that exists in society, from one person to another over time and space. If you inflate the currency supply, if you double the currency supply, but you haven't doubled the number of goods and services that are available to buy with that currency supply, it's just like each unit of currency has less purchasing power. It will store less. There's twice as many units of currency chasing after the same amount of goods and services. And this makes it a nightmare for people to try and get by.